Today's focus is Peter Lynch / Fidelity versus Elon Musk and Tesla is sort of the question mark today to help clarify what's going on with Tesla stock currently. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support is greatly appreciated. If you enjoy the show, would like better trading input and advice as you're trading through and investing through the week, please join us at the highest level. We do a show every day focusing on trends one might want to be aware of that are going on. So one of the reasons why we've been slow to approach sort of coming back to our show is just the fact that one of our focus sort of advisors through his work is a gentleman named Peter Lynch. Peter Lynch used to run or built Fidelity up into one of the largest companies in the world, but the Magellan Fund was perhaps the best performing fund for about 20 years and still continues to perform well for the folks at at Fidelity. So one of the things that's emerged over time is the logic of how he invests, et cetera, and trades has sort of been blended into the marketplace. So we now have a situation where the core logic that he presents tends to show up at a lot of other firms as companies are preparing to invest money coming in for individuals and institutions. So one of the difficulties that's been going on is last year there was a lot of money made from friends of our show watching and us helping in the process of evaluating, well, how do we trade and invest at this point in the cycle for Tesla, et cetera. And after all those benefits were felt, the thing that we noticed was that, there was an easy way to let good earnings or production numbers pop up and then trade it efficiently to make a great deal of money. And that whole process has seemed to go out the window to some extent. And so therefore we're in this mode of, okay, well, how do we look at the current circumstance for Tesla and its stock, and how do we sort of anticipate, well, what's going on and what will happen next? So the answer kind of we came up with was that Tesla is what's called so there's something called big cap growth. So if you look at the types of mutual funds out there, there's technology growth, there's big cap growth, there's automotive. There are all these different niches that people are trying to invest in. And one of the most important areas is something called big cap or big capitalization growth stocks. The reason why it's a focal point of a large number of investment managers is that when you have a very large fund or a large industry where the players in that industry are very large in market cap, I keep saying the market cap term, even though it means large market capitalization. And so the goal of a mutual fund for owning a large market capitalization stock is that the larger the company is, the lower the chance that something happens suddenly that puts it out of business. So the other thing is there's a lot of ways to scrutinize large capitalization stocks. So there's a large number of entities that will focus on them because there's the opportunity for good growth. It's large enough that it's not going out of business rapidly, so your investors don't lose their money quickly. They have all these advantages. So companies of this sort would include Amazon, it would include Google, Tesla, et cetera. So the question that comes up is, what is the big difference between, let's say, Apple and Tesla in terms of the ability of money managers whose livelihoods depend on it to jump in bed and sleep very nicely every night that they have ownership there? And the answer we're coming up with is anytime you violate sort of core principles of how the large investors invest their money, it means that you may still be doing well, it means that they will invest, but you get what's called a discount. So if your growth rate is, let's say, 100%, instead of you getting credit for the 100% growth, they might give you 60 or 70% growth, and then that's reflected in the stock price. So in essence, you get a discount on your stock price. So one of the core ideas of how institutional money managers invest is sort of playing around with PEs or PE ratios. So one of the ways that we can look at things is that if you earn a certain amount of money, let's say $1 a share, and you're growing at 100% per year, you multiply $1 of earnings times 100% growth rate, and that equals a $100 stock price. So this is a sort of a very basic example of how things might work. Well, let's say you're earning, let's say $100 a year per share, and you're growing at 100% per year. Again, you multiply 100 times 100%, and that equals your stock price. Well, it turns out that Tesla's actually growing very rapidly. They're on track for 100% growth this year, 100% growth, if not more, next year, and again the following year. So the revenue side of Tesla's numbers are quite excellent. And if Peter Lynch were going to look at it, he'd go, okay, yeah, they're doing their thing in terms of the growth rate that's expected, but the next question is, well, what's happening on the earnings side? Well, we had a really interesting conversation this week, and the conversation came from a dialogue that I had between myself and kind of a manager at Tesla. What we were talking about is the fact that would their impairment charge have a major impact on what Tesla was doing? And the answer he came up with was no, because there's a large enough block of cash from the EV tax credits to cover it. And so this introduces what I call a Peter Lynch Fidelity Magellan violation in terms of Tesla/Elon's process. As you know, there's a very large number in terms of the amount of cash that's been flowing into the balance sheet of Tesla from the EV tax credits. The problem everyone is having in the industry is, wait a second, if the profit number being shown by the company is, let's say, half EV tax credit and half earnings, how do you measure that when it comes to, a long-term investor investing in Tesla? Well, a lot of people are saying, well, don't worry about the earnings, let's just worry about revenue, because tech companies tend to grow very quickly, and even if they do earn profit, they tend to retain the profit and reinvest it because they need it as part of the growth of the company. And so that's sort of the conversation. One number for Tesla just came up that I was impressed by was Tesla has $17.3 billion worth of cash on the balance sheet. So they could wipe out all their debt and still have a large amount of cash that allows them to grow efficiently. So this is sort of why I think we're sort of in a crazy stock go nowhere zone for Tesla currently. Tesla's claiming a 23.5% margin. Their revenue is growing rapidly, but how do you figure out what the actual margin is so you can figure out what the actual earnings number is? Now, one of the question marks is, what's the logic that Elon has currently when it comes to figuring out what they're going to do in terms of profit and revenue? So it turns out that Tesla has a situation going where for every $1,000 or $2,000 worth of reduction in price, the number of buyers potentially expands by a certain amount. And so Elon's goal has been to, how can we use the EV tax credits to, in essence, lower the buy price or sell price of the vehicle, but still have the company making money. So it's good that he's doing this. It is helpful to the company for its growth to do this. But the problem is it has this lurking question behind it is, well, wait a second, if the company is truthfully not earning any money, then therefore their PE ratio would be 100% growth in terms of revenue, but zero profit, let's say, if in a worst case scenario. And anything times zero is zero. This is why there are certain people that still have $167 price targets on Tesla, because the argument is, well, you guys are doing great on the revenue side and you're growing, but we're not seeing any profits from it. Now, so this is, I believe, when you start to tear away all of the, well, what's going on and why, we're in this situation with Tesla and its stock price seeming to go nowhere. And now that we've sort of increased the concentration of shares in the hands of the large institutional investors, the discipline which they apply to any of the investing that they're doing is even more focused on core fundamentals like the ones I've just thus far described. So the question then is, what are we going to see as we head into earnings? The argument that I'm making or seeing is that yes, Tesla will have great numbers in terms of revenue and profit based on production that just occurred. The problem that pops up, though, is that we have another issue lurking, which is a continuing use of the tax credits as a way to bolster earnings creates sort of a battle between sort of Wall Street or the Fidelities of the world and Elon in terms of, well, how do we value you? And the best way to value you might be at a discount as a way to ensure that we don't get burnt by you guys doing something unusual. So one of the goals or things that these guys want to see is, hey, what was your real profit? And is that number growing on an annual basis along with revenue? And if Elon is sort of playing around with that number when it comes to using the EV tax credits, it's not necessarily a bad thing, but the problem is what happens as those tax credits decline in number. Now you have the situation where he may have to raise prices and find out what the marketplace thinks of the higher price that might come with those tax credits disappearing as a revenue boosting fuel for Tesla. So I really think that this is a big part of the conversation as to why we're sort of stuck in this 650 to 700 price range for Tesla. And because of how the 3-day rule works, which is the delay after earnings, I would not be surprised to see us end up in the same range just after earnings are announced. And then this sticks around for a while until we have giant revenue boosters like what's going to happen in Germany and any kind of expansion happening in China, or even expansions, or even what's happening currently in Texas in terms of the build there. So unfortunately, the company's stock / price, et cetera, remains at a discount until Elon sort of works out a plan that the street or the large investors are pleased with. So I'm sort of tacking this on at the end of our show today. By the way, don't forget to like and subscribe. Also wanted to encourage you. We have a few SpaceX shows if there's interest. So what's happening right now is that we've been sort of tracking the numbers, and we have a preview show that we're working on for tomorrow that focuses on the fact that, wow, the general numbers in terms of options at the key dollar points seem very similar this week as last week as we head in. And so I'm going to review those numbers separately, but we seem to be stuck in this unknown zone. And things like having an earnings announcement should break us out into another level, but that can be impacted by the issues just described. So the other thing that we have an inkling of that we'll be digging more into is the fact that, let's say, for example, you want to short a stock. One way you do it is you borrow the shares from a large institution, maybe Fidelity, T.Rowe Price, one of those guys, and you pay them a certain fee. You use those shares and then you return them afterwards. So now that so much of Tesla's shares are concentrated in the hands of very large players, we're starting to see high concentration of stock, limited number of people who can manipulate that, start to play into how things move for Tesla on a regular basis, and nothing like what we saw prior to the entry into the S&P. So we're keeping an eye on this, but the suggestion is it's almost like these guys can get in a room, close the door behind them, and make up their own rules, and then afterwards announce to everybody how everything went. And in this circumstance, I think it's a lot harder for smaller investors to make money. And I think you have to be a lot more careful because you kind of don't know what these guys are going to do behind closed doors, once they come out. So in theory, we should get a breakout after we get the next earnings zone. But again, I wouldn't be surprised to see if any action is delayed severely because of the new process for how Tesla works, which we just saw after the production numbers came out, which is it just didn't do much, didn't go very far, and then retreated to lower numbers even after we know the good numbers that were in the production process. So, we'll definitely keep you abreast of this. And I hope our discussion of, well, what is Tesla's real PE is useful. If you look quickly on Yahoo or anywhere else, the trailing PE means backwards PE is running 164. The forward PE, i.e. a year ahead, is running 143. So, the challenge is there are numbers out there and they're deduced from a number of variables, but the big question mark is, well, wait a second, that's a nice growth rate and a fairly low payout in terms of earnings. And I believe that this is what's holding up the stock. And as everyone gets more comfortable with this, we'll see more movement in the stock price up. At any rate, this is Greg for Teslafaninsight. Thanks for joining us once again. The next portion is our health tips. Don't forget, prior to lovemaking, no more than a salad would be a great idea. Also wanted to encourage you to consider don't go better than 4 hours of eating, minimum 2 hours to let the food digest. And the rest of our list of health recommendations are below. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitro, Hebrew, Choda Hefes, Farsi, Здравствуйте, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese. And in Jamaica we say, enough respect, walk good man. Thanks for joining us, and we look forward to constructive comments.